Okay then guys, let's look at gaps as a confirmation. Okay, so trading the closing of gaps is pretty much the only reason you should be trading really early into the week. Okay, and the reason for that is it gives you an awesome early entry into a mechanical bias that you've got based on your own chart interpretation over the closing period, which is the weekend. Okay, so for instance, this is Swissy yen. Okay, the date's the 24th of February 2020. On the overview yesterday, we had a short bias on all yen pairs other than USD JPY. However, we were expecting USD JPY to retrace for an entry long, so we wanted it to go down as well. Okay, so we had that overview bias, and this pair wasn't in the overview, but that doesn't matter. They're all the same. Okay, this is a good example of it. All the other yen pairs are the same. So Swissy yen, okay, W double top setup potential. Okay, therefore you've got your area of supply. Okay, which means if your bias is down based on your own chart interpretation, you should be looking for an entry into that trade. And by 1 a.m. in the morning, this gave you that confirmation to go short based on the gap. Okay, so this is the hour chart. Okay, you can see this is the area of supply, and the fact that price gapped down indicates that price wants to move down. Okay, so that's the first thing to remember. So price wants to move down based on your analysis and the fundamentals over the weekend. So the technicals, the fundamentals, they're lining up in that respect when it comes to this point. Okay, that means price is likely to close that gap and give you some kind of confirmation. Now, we know that within the candle close on the Friday to the candle open on the Sunday, there's fundamental factors that happen in the world to indicate that price is going to change on market open. And what we don't know at this time is that price is going to close, okay, as previously discussed in gap videos. Okay, so we can't buy it all the way up. We can't gap trade that, but what we can do is we can look at the longer term move based on a gap close. Okay, so this retraces about 70 pips, which is huge on this pair. Okay, we don't know that's going to close. We can't just get in a buy position thinking it's going to close because we don't know, and sometimes it doesn't. Okay, but what we can do is we can say, hey, number one, there's something's happened and it is suggesting that the bias is correct. Price is open lower. Therefore, we are right in our bias. Okay, the second thing we know is there's a large amount of volume within this area which has got to be soaked up, which is likely going to be soaked up before we can take a trade based on that bias. So when it provides a reason to enter by a rejection candlestick, the gap's closed, you're in the supply. If you use the EMA 17 as a confirmation, potentially that can help you out with that as well. Okay, that is a very, very easy way to get into your bias at the beginning of the week. A very easy way to do that. Okay, and gaps have been a focus lately, hence why I'm doing this video. Okay, the gap has closed, the rejection candle has presented itself, okay, and then we get that down move. Okay, and this happens fairly often, and I just want to reiterate, it is an excellent way of getting into your trade mechanical bias earlier than waiting for a Tuesday. And in this case, if we didn't trade it on the Sunday night, we'd have missed the move. Okay, and there's an example of using the EMA 17 to stay in the trade as well, okay, as it retraces to it and then drops. So that's a very close, very basic appreciation of the confirmation of a gap close, and it's really the only way to trade gaps. Okay, it's worked many times in the past for us. Okay, this is an excellent example of that. It usually is an excellent example. You just have to be awake. Okay, and the caveat to that is if you're trading too early in the week, for instance, if price opens here, okay, and the gap's here, is likely to close in like 10 minutes. Like if you take a position based on a candlestick when you're not in at least the Tokyo session, you may take a position there, but your spread is going to be like here. Okay, so your spread is not going to make it worthwhile entering that position because it's too early in the week. So I'd suggest you definitely look at the spread before you enter trades based on the gap close. Okay, but it's a good way to get in early in the week into a preferred trade setup. Okay, and this week it's followed through excellently on all yen pairs. So take it with a pinch of salt. Okay, use it with a bias, um, and you should do well off that confirmation in conjunction with anything else you use. Thank you.